Let's continue our conversation. Look at the markets, the economy, some investing strategies. David Stryzewski is with us, CEO at Sound Planning Group. Thank you so much for being here. So look, we got the jobs, a lot of jobs news last week, particularly non-farm payrolls. We're waiting on the Fed. I mean, how are you feeling overall about the market and the economy?
Well, I think that consumers are really facing some real challenges that are not necessarily getting picked up in some of the headline data that we get out, like we just saw with those non-farm payrolls. One thing to just kind of note, and Bloomberg's the one that gave us this information, they said that those were off by 760,000 just in 2023. So there was an overestimate of employment that was not calculated properly. And looking at numbers here recently, the last 6 months have apparently we have lost 1 million full-time jobs. So there's a very big difference between the government's version of this report and the household version of this report. Of course, on the government version, you know, somebody that's working 2 part-time jobs will get counted twice. In the household report, they say, hey, are you working? Yes or no? And so we think that we get a little bit more accurate information off of that. But the U.S. consumer's not doing great today, and that just follows some just not so awesome news, Nicole. You know, if we look at employers right now here in the United States, 43% were unable to pay their office lease last month. That is a big number. If we look at the fact that we have corporations, over 1,000 of them, that say that they're shutting down locations right now. That is not a healthy, robust economy where all sorts of new jobs are coming into the place. And then, of course, we're looking at 63 banks that the FDIC is willing to admit are having financial trouble right now with over $500 billion of upside-down assets. That's just the ones that they're willing to admit. I personally believe that the number is far larger, and that that's likely going to be one of the challenges that we face here in the second part of the year if they cannot reduce interest rates in a meaningful way, which ultimately leads us to the Fed.
Yeah, and look, I have a friend who would sort of echo what you just said, had a big real estate position here in New York City, has now taken a majority of the company of about 50 employees out to Long Island. It's so much cheaper, saving probably, I don't know, it's a small business, right? But probably saving $50,000 or more a month just by changing that lease, and not able to really keep up with that. At the same time, the CEO of SL Green has been out touting their A buildings, because they have, you know, there's B class and C class buildings, but those buildings, those sort of hot buildings are getting full and have that occupancy. That being said, I wanted to talk about someone's portfolio, because to your point, you know, we do get mixed messages sometimes on some of the data. And if you looked at the household survey and the JOLTS and all that, someone like Andrew Brenner today said the same. He said they would tell you that the economy is slowing. So you're looking to commodities, right? Silver in particular, gold, silver, what?
Yeah, so, in addition to the right cash assets, the right protected assets, and risk assets, we think that silver is a really important part of that conversation, because everyone mentions gold, but it's gold and silver. And if we understand silver just a little bit, we should understand that the gold to silver ratio that was globally established for decades was a 15 to 1, 15 ounces of silver for 1 ounce of gold. Well, today we're at 79 ounces to 1. And so this is a massive gift for those who are paying attention right now to the silver price. And in fact, with silver's all-time high being $50 and everything else being at all-time highs, I would say that silver's 40% on a discount right now if it's at about $30 at spot price. The challenge that we see right now in silver is that we are looking at China right now and a lot of central banks purchasing gold and silver at record rates. But the problem is you have to produce this silver. It has to come from someplace. So, if they're sitting here selling and selling, you've got to have supply. Well, right now the supply is so low in China that they're paying $3 extra per ounce of silver. That's a 10% gain or load just for over spot price that we get to pay here in the United States. So I don't know if Westerners recognize the rest of the world's scramble for this metal, but it's certainly there right now. And I don't know that we're necessarily paying attention. But it's the solar demand. It's the fact that that's the biggest industrial use case, and that it's projected to increase by 900% in the next 8 years, which would literally take care of all silver ounces ever mined within a year in the event that they hit those targets. So no one could purchase any. It all goes to silver. So we got to find a whole lot more than we have today. And if we're looking at supply to demand ratios, when we get into a bull market, silver tends to go to a 30-to-1 ratio, at least in the most recent bull market runs.
Look, I mean, you're saying that it's at a 40% discount, making the case, saying how the demand is there. They just don't even have enough supply. So even a silver bear may have a hard time arguing with you today on that. You're also buying into NVIDIA, which was around 120 today after the stock split. Tell me a little bit, I mean, do you think it has more upside potential? Like, because there are people who do think it's overvalued, there is competition. And the question I asked earlier today was, okay, maybe it won't go up 900% like it did, but are you worried that it drops down below 100 and really crushes people? You know, what's your view here?
Well, I think ultimately things that go up ultimately do go down, and so that's real. But here's reality. AI is what we are rallying on in this market, and NVIDIA is the supreme chip leader. And so there's two things that happen when we do a share price split like this. The first thing that happens is the perception of value increases. You know, if you could own one share for $1,200 previously, now it's 120. I can own 10 shares now for that same $1,200. That seems like more value in your account for doing it. And then the second part of this is more importantly, and that is that because it goes down to 120, people look at NVIDIA's price history and they go, oh my goodness, it's been at 120 before and it grew to 1,200. It's going to definitely go up from here. So they're going to rally back in to NVIDIA at that point in time. So yeah, there's a ton of competition right now in AI and in these chip makers. We do think NVIDIA is positioned really well, although there's a lot of competition that's coming out here. One thing I wanted to note, and I actually have a prop with me here today, Nicole, and that is that the next phase of AI is going to be not in large language model, but in large action model. And so what does that ultimately mean? What that means is that AI is going to start being able to functionally do something for you in life. And so I have here this little tool. It's called Rabbit AI. And what Rabbit does is, it was like the first version of this. I waited several months to get it. Basically, it's like old cell phone technology. It's pretty slow, but it does have the ability to like order you an Uber by just asking it a question. It knows your location, knows where you want to go. It'll do the whole thing with payment. And so I think that we're going to see, you know, companies like Apple, which obviously have big announcements here today in AI. I think that we're going to be able to see organizations like Apple and Microsoft really, you know, take off and into this next AI revolution, because they're the organizations that have, you know, the office suite that people are using every single day of their lives. They're trusted. We'll give them our financial information on some level, so we might feel okay with them being able to pass that to different organizations and make payment. And so as we look at AI and we look at the future, I think that the most important thing is that we understand that what we have today is in its very beginning. Where we go tomorrow is likely to have new winners, new companies at the top. But NVIDIA and AI are definitely at everyone's mind's eye right here as we're moving forward into the second half of the year.
Yeah, so we'll watch for more details on large action model in this, the way it's moving forward. I love your Lady Liberty, Statue of Liberty there in the background. I have one very similar in my home. David, great to see you. David Stryzewski, thank you for all of this, CEO at Sound Planning Group.